Inside day on crude, inside day on gold. What does that tell us? Inside the range from yesterday, nothing's changed. So we open up our charts, daily charts, right in the middle. Open up our 89 range charts, our 34 range charts. We look faster for intraday trades. And here's a good example of what we saw on pretty much everything today. Euro looked this way, Russell this way, gold, crude, everything here had this very similar pattern. And that was, you'll notice, a very easy wedge pattern. So we had a sideways range. There's your sideways range. You've got your previous lows down bottom here. You get your previous highs up top here. And of course your BMT and your open up top there as well. Now this is a situation where we had just finished that big drop down. Remember that, guys? We just came out of that big drop down Wednesday, Thursday, and now we're going sideways, right? Yesterday we heard about that supply being released from the IEA, almost sticking it to OPEC a little bit. So you're wondering what's going to happen right now. And we were joking around this morning by saying you could almost feel the crude traders grinding their brain cells together thinking, where are we going from here? Right? Calling their analysts. Analysts, where do I go from here? We don't know what to do now. Is there too much supply? Is there not enough demand? What's OPEC going to do next week? Nobody knows. So this is what results in this sideways range here on crude oil. And what we love is when we see a wedge like this inside day, we have a really easy roadmap for success today. It's very simple. Inside day tells me avoid the fake out breakout, avoid the middle, buy the lows, sell the highs. So as soon as crude goes down to the lows, I'm going to buy the lows. As soon as crude goes to the highs, I'm going to sell the highs. Now if it breaks out, if we break out through this wedge, I'll sell the high a day, I'll sell the previous high of day. If we break down below, I'll buy the support, I'll buy the previous low of day with the goal of going back up into this range. We did this 4 times today on crude oil. All 4 were winners. Bought the lows twice, sold the highs twice. And we'll show you guys that in a second. So inside day, we knew we wanted to buy the lows, sell the highs. It's exactly what we did. We did get one trade here on gold. Gold was very similar here. Gold actually tumbled below the previous low of day. Stops get run. It goes sideways. We then bounce up, I sell the retracement, and that was the one trade on gold today that I took this morning on gold. Now, of course, it's a Friday, so get in early, take that money and run, right? We know things will slow down, usually after 10:30, and that's exactly what happened this morning. At 9:30, though, we finally got some action here. We came down to the lows, we test the lows, and again, I'm using this support level here. You'll notice it's not actually at the lows of this wedge. Remember, I'm going to buy support at the low area. I don't actually need to be at the wedge lows here. So we see some support here, 90.75, and of course, I'm going to buy that support knowing it's an inside day. We're chopping around the open, very slow. At 9 o'clock, 9:30 rolls around, we test the low here, and now, of course, I can either I can buy right here as a scalper, I can read tape, and I can buy right there at support. Or what I did was I waited to get above that swing high, get above that trigger, and I bought above the resistance. So there were 2 options in this trade here long. We want to buy the lows. I can, again, as a scalper, as an aggressive tape reader, I can get in long here from 90.75. Or, like what I did was I waited to get through the resistance here. That's called the trigger line. The trigger line is the resistance. And you can see the swing high right there, and it breaks above that swing high, and you'll notice the entry. The entry is at 87, which is right there. It's not at the 75 area down bottom.